Hello and welcome back to All Things Money. During this segment, we're talking a little bit about Warren Buffett and his company Berkshire Hathaway has been trailing the S&P 500 for the third straight year. And I love Warren. He's a great guy. He's got a lot of good lessons to learn. And my point in bringing this up is it's extremely difficult year after year, every year, to beat the market. And that if that is your goal, you're in for some tough times ahead and some severe disappointments. Even the best managers of all time have streaks where they do very well, and then other times that they do very, very poor. A couple things that's hurt Warren the past couple years was his the housing slump and his bet on energy markets. They wrote down the debt holdings of energy future holdings by $390 million last year and $1 billion in 2010. They had $3.1 billion of impairments in the first quarter, and Buffett himself admitted that he probably paid a little bit too much for ConocoPhillips. And his prediction in 2011 for a housing recovery has not panned out so far, and so things like carpet maker Shaw, Johns Manville, Acme Brick, and some building industry-related companies has really hurt his results. It will be interesting as Buffett, he says that he has already selected a successor to his position. It will be interesting to see how Berkshire Hathaway transforms in the future. But anyway, we just wanted to touch base on that. If you're following, even the richest people, the sort of acknowledged as one of the greatest investors of all time, Warren Buffett has been having a hard time lately. Frankly, the S&P 500, if you don't own Apple, it's been extremely difficult to keep up with the S&P 500. We saw this in the late 90s with Microsoft and Home Depot, Cisco, companies like that, that if you didn't own those, you could not keep up with the market. We're seeing the same thing today. Apple and Exxon are such large percentages of the S&P 500 that if you don't own those in fairly significant quantities, you'll have a hard time keeping up with it. This was an interesting article that I thought, I've heard several places and I thought it would be appropriate to cover it this time, but big manufacturers are more and more likely to be stamping the Made in USA on their products in the future. And we're seeing it already that unlike the smaller peers, some of the larger companies are moving production actually to the United States from China. Now, let me say it again. Some of the large manufacturing companies are actually moving production from China to the United States. Labor costs, quality of goods are the top reasons they're doing that. And because of the high unemployment in the United States, it's actually becoming a low-cost producer, especially when you factor in, the labor costs may not be on an absolute basis lower than China, but if you have cheaper labor costs here, they can produce the thing and sell it here for cheaper. So this survey found that 37% of U.S.-based manufacturing executives plan or actively considering moving production from China. That rises to 48% among companies with more than $10 billion in revenue. Okay, so companies more than $10 billion in revenue, 48% of them, half of them are considering moving production from China to the United States. And this is something that's very important. They expect wage costs in China to continue to rise, and it is more costly than it appears on paper because of factors, of course, the proximity to the customer and the ease of doing business. You have language issues, you have Chinese government issues, things like that. So it's not just the pure labor cost. And you're going to see that as China's middle class continues to become larger and the average factory worker there becomes more attuned to what's going on in the world and says, hey, $1 a day, I'm not working for that anymore. You got to give me some decent wages here. You're going to see more and more of this. And so the economics are really swinging back in favor of the United States. Some of the companies that have plants that can be moved, the survey cited was Ford Motor Company, NCR Company, Master Lock, Sleek Audio, Chesapeake Bay Candle, or some of the example of companies that are considering moving production back to the U.S. The U.S. is really the low-cost developed world country, wages typically below Western Europe and Japan. European and Japanese companies are also likely to export from U.S. plants. Now, companies like General Electric and Boeing said they went too far in moving its operations out of the United States. And GE has moved much of its appliance manufacturing from Mexico and China to Kentucky. For those of you listening on the internet, may not know it, but right here in New Bern, where we're headquartered, is headquarters to Bosch. They make high-end washing machines, dryers, dishwashers, things like that. And the manufacturing takes place right here in the United States. Caterpillar shifted from production in Japan to Georgia to build small tractors and excavators, and they're expanding 15 U.S. facilities. So we see this trend, which for those of you that are big proponents of manufacturing and made in the USA, this is very good news. They estimate that there's around 600,000 manufacturing jobs that are unfilled because of lack of skilled applicants. Well, that brings us to our next break. When we come back, we'll finish up talking about the reshoring of manufacturing in the United States.